Portfolio Builder members, today's update for 12/28/2018, Friday, the second last trading day of the year. Our portfolio is doing very well. We're currently holding a allocation that is 70% stock and a target of 30% cash. And in actuality, we're only holding a 64% stock position and a 35%. Prior to that, we had a 10% gold position and a 40% bond position, which is our normal strategy setting for generating retirement income with the Portfolio Builder income platform. And at any time, if you would like to try our portfolio free for yourself for 30 days, just click in the link in the left-hand corner of this video. Also, a link to this spreadsheet is available below this video as well. So you can see back on the 19th, I sold my TLT and gold position and went heavy on our globally diversified portfolio of country ETFs. And based on each country's GDP, we're allocating our portfolio to help capture the best profits around the world through the top corporations. And this boils down to having a 24% position in the SPY ETF, and a 17% position in China's MCHI, and a 7% position in Japan. After that, the positions really get much smaller. And so if we go look at the SPY ETF, we can see that this was the day that we entered the market, and right after that it crashed significantly from 267.50 down to 235. Now luckily our strategy does involve selling covered calls, typically near the money and sometimes even in the money when we think there's downside ahead. So this crash didn't hurt our total portfolio value very much, and this rebound over the past 3 days has actually turned our portfolio profitable during a very rare market condition that can absolutely slaughter many strategies out there. Now if we look at the big picture, my expectation is for the SPY to jump back in the next 4 to 8 weeks above this 260 line and start to bounce again between here and 280. And the primary question is whether or not China and America can come to some sort of agreement and continue all the trade routes. If this gets worse, quite likely we have a serious stock crash in our hands. But if they can make some progress, I suspect it will either stay in this range or go up from here. Now, in general, I like to time when I sell covered calls based on volatility. And the higher the volatility, the greater return we can generate selling covered calls. When volatility is low, I'll be a lot less likely to sell covered calls. And when volatility is high, I'll be much more likely. So this may involve getting assigned on our stocks quite frequently. And it also involves trying to time when we think we're going to see a market reversal, because then obviously we just want to let our equities ride and generate profits on their own. Now, by globally diversifying our portfolio, we can remove a certain degree of political risk, but obviously China's biggest client is America and the rest of the world's biggest client is China. So they're all tied together, and if there's a systematic crisis, I think we can see this entire equity portfolio crash by at least 50% from current levels. So that's a risk we put into account when we're running this strategy, and why we buy out of the money put options when volatility is very low and thus option premium is cheap. So right now, our entire portfolio in the equities side is definitely at risk of a serious market correction. We're sitting 10 years into this current bull market, but it's a question: is this the bottom of a one-year bear market in global equities, and potentially the continuation of a bull market for American equities? Or is this crash just getting started? One way we can protect our portfolio is by having a heavy percentage of our portfolio in the TLT. Now, that's not going to completely bulletproof us from any type of crash, but the high and lows in the TLT is much smaller during the 2008 crisis. as well as during the dot-com bubble. And that's only 2 decades to look back at. Also, there's typically an inverse relationship between the TLT and the SPY. And although they're both, in general, going up over time, when one goes up, the other goes down, and when one goes down, the other goes up. Now, this has been breaking paths recently, which is definitely alarming. And another reason that even if we do use the 40-40 TLT equity split, we still want to have out-of-the-money put options protecting our TLT position. Because during a real systematic crisis, most likely both of these underlying assets will collapse in value. Now, if I hop back over to our spreadsheet, you can see the only covered call we entered into when we made the switch out of bonds into equities was one on the SPY on the 20th, expiring on the 31st with a strike price of 247. Days after I wrote that, it crashed down to 230. Today it jumped up to 250, almost to the point where it would be assigned, and now it's pulled back down. Down here you can see all the covered calls we've written so far to date. Typically every Monday we will write covered calls. And while you have the liberty to use your portfolio however you like, you'll get to see how I pick and choose exactly which ETFs to write my covered calls on and at which strike price. Over here in the open option buying, this is where we will start buying leap options, out of the money put options against our underlying ETFs to protect ourselves against a major financial crisis that could potentially be looming. Now, some interesting news. Here's some search trends from Google. Top search right now in the past month, stock market crash. Usually by the time retail is figuring it all out, it's too late, as may just be the case right now. Cryptocurrencies are continuing to show a strong correlation to stock market risk-taking. When there's more risk-taking happening in a broad push into the stock market, we're seeing algorithms automatically buy all of the cryptocurrencies at once. So we're not seeing certain cryptocurrencies go up or down individually. We're seeing them all pump up and down together, which is worrisome for investors who are too heavily invested in cryptocurrencies, because if the case is truly that there has to be a high level of risk-taking in equities for cryptocurrencies to get a strong flow of capital, then that may be tough to come by unless the central bank reverses course into 2019. And so far, there's very few indicators that they will. Also concerning is that the Treasury yield hasn't really moved much during this dramatic move in the market, which was supposed to be pensions selling Treasuries to reallocate into equities. And here's a chart of the 10-year Treasury yield, just slowly, gradually dropping, which is very odd considering the central bank is reducing its buying or demand while the government is dramatically increasing its supply, and at the same time stocks are going up. So something's a little funny right here. And if we get a feel for just the consumer retail investor sentiment, just go to stocktwits.com, click on the trending button and unclick the pause button, and you can see people just going crazy when the market goes up. It's definitely a very herd mentality out there, as chasing the momentum has been a strong strategy over the past few years. Other important headlines: U.S. trade paradoxically explodes from the trade war, and so everybody's trying to rush their orders in before the tariffs hit, and if the tariffs don't really hit, will it show a slump? Will it just help boost all the GDPs around the world and continue strong growth forecasts? This threat of a trade war may help push GDP's projections going into 2019 and be a potential spur for a bull market. The Chicago PMI came in very hot, signaling expansion in pretty much every category, which should help push the Fed to continue its plan. Meanwhile, high yields continue to rise, which may make it hard for corporations to borrow money, which may also be another huge shock in demand for stocks if corporate buybacks were to suddenly slow down in 2019. And here's an interesting quote from the top performing hedge fund this year. Of course, he's been losing money for years trying to short the market. Crispin Ode. Wrap things up, let's take a look at our total set of ETFs we're managing positions in. The SPY we've already investigated. It's a high risk, and we'll be playing it very cautiously, rotating between a heavy SPY position and a light SPY position as we jump into the TLT, most likely in several weeks from today. Over at the MCHI, when we do switch to the TLT, this will dramatically reduce our exposure to MCHI. Right now, we're very heavy in it, and I'm expecting a global rally in equities right now. But I don't think the risks are over for MCHI and that it could potentially drop down to this 37 range quite easily if the president goes into full war mode with the trade war. However, there have been a lot of signs that they are making progress, so perhaps we are near a bottom. Japan has the third largest economy in the world and just got through a very ugly year of trading. Of course, it could go lower, but I do like this entry point, and I'm expecting, once again, a global stock market rally over the next few weeks. Germany's politics have been a nightmare lately, and this has caused their stock market to drop tremendously over the past year. Of course, it could go lower, but this might very well be the cheapest that we see the EWG for a considerably long time period. The UK is down, most likely from all the Brexit chaos, disrupting trade routes, providing one of the largest economies of the world a very discounted price to enter the market right now. Brazil, relative to its 2008 high, is significantly down, and they're undergoing serious political reform right now. This may be a good turning point for Brazil as well. And meanwhile, India remains one of the healthiest stock markets in the world. And although this ETF has only been started since 2012, has had a consistent growth pattern over the past 5 years. So that's our portfolio. It's simple, it's powerful, it allows you to generate retirement income and hold on to an extremely diverse and valuable set of ETFs that you can pass along when your time comes and you want to pass along a valuable and easy to follow strategy to generate consistent income. So look for new trade alerts Monday, sign up for a free trial, and see you on the next video.